Welcome to this week's episode of Your Stock Request for the 12th of May. Hi, I'm Michael Gable, Managing Director at Fairmont Equities. Your Stock Request is the weekly video where I take your requests and analyse the share price charts. So this week we have Liontown Resources, Cobram Estate, REA Group, Service Stream and Drone Shield. So if you have a request, please send it through. Make sure you've signed up to the free newsletter, but our better ideas come out every Tuesday in the Dynamic Investor Report. So make sure you've subscribed to that report. If you do enjoy these videos, we'd love you to share them on social media or even leave us a review. And if you're watching this on YouTube, make sure you subscribe to the YouTube channel. Our main business is portfolio management. So if you'd like to get my hands on help and advice when to buy, when it's time to sell, and open a broking account with us, then please give me a call. And all the advice here is general only. So we've got Liontown Resources here. Price action back here in March was very bullish in my opinion. It looked really good. We had this, we had this sort of flag here, broke higher, came up to congest under the old high, and then it popped up. But obviously, price action in early April was then a big negative because it's failed to follow through. So what we've had was a breakout, a failure, back under the breakout. Sometimes a stock will, I'll just zoom in a bit. Sometimes a stock, if it comes back under the breakout, it might just go back to this prior little trading range and then do another break. So if you didn't sell on this break, just look to see what it does here around that $1.80. And obviously it struggled. So it was clear that it was a failure to move higher, and often what you get is a move back to the bottom of the range. So where you've got, let's say this trading range here, a failure to break higher, come back in the range, it'll often go back to the lower part of the range, and in this case it's actually broken lower. So look, with a breaking support here over the last few days, to offset that, it really needs to tell us that this is a false break now and it needs to be back up here smart very quickly. Otherwise, if we're just getting a bounce back up to these levels here, the old support levels, and then it rejects, then you'd be looking at a more of a slide. Okay, Cobram. So since the start of the year, it hasn't done much. It's struggled, but we could see that it has been forming these higher lows. So after bottoming out in February, it's been making a little bit of progress. It seems now that we've got a clear level near $1.80 that's going to offer resistance. So in my opinion, it needs to crack above that for the chart to look more bullish. So that would be a good thing, of course, but clearly there's other levels here of potential selling for those that got in on the IPO and or got in just after the IPO and have been losing since day one. So look, it needs to get through $1.80, but then there's going to be a lot of resistance levels along the way. Okay, REA. So we had a stock here that was also in a range, broke under that range earlier in the year. So supported 150, fell under it, came back up. Unfortunately, couldn't get itself trading up into the old range. What it did was it rallied back up to 150, rejected. So very clear rejection on the retest. And if you didn't sell here, then this sign that should have been the sell signal, that it just clearly couldn't get back up in that range, and it was always going to fall from there. So it's continued to head lower, and then as we could see in the last few days, it's gapped lower on big volume. So potential breakaway gap, which means we could see a bit of an acceleration to the downside. If I'm wrong about that, it needs to basically recover this gap and be trading up here again pretty quickly, because sometimes you get these false sort of breaks or signals, but unless in the next sort of day or two it's up here, which I think is unlikely, we're just going to see an acceleration to the downside. Okay, service stream. If we zoom out a bit, we can see it's been a massive underperformer. Very negative looking chart for a number of years now. Plenty of price rejections along the way to tell you to sell. But over the last several months, it has been leveling out, and then we had this sort of nice move up here in February on a big spike in volume. So that was a positive. So it hasn't kicked on, but it does look like we've got a bit of a base here, and now we just have to look at some obvious levels. Obviously it needs to hold this low. If it breaks that would be a huge negative. But around these sorts of prices here, between $1, $1.10, you've got some resistance. So it's in the middle of this range. Breaks under that negative, pops above here, then that's a positive. Okay, finally drone shield. So if we zoom out here, we could see that it's built quite a large base here. So after bouncing off those 2020 lows, obviously it didn't get back to its prior high, but it just built a massive base. So basically that's a positive breakout there a few weeks ago. It hasn't really followed through, and instead of just going sideways to consolidate, it's come back sharply, which is a negative. So it's sort of thereabouts back at that breakout level. So basically it needs to recover from here, of course. Hold the breakout, recover. A fall back in here would be a negative. But one point to note, of course, this base went on for quite a while. This is clearly over a year. It looks like it's about a year and a half's worth of basing, and such a long base can lead to a very powerful rally. So if it can hold here and get going, you may be looking at a large rally. Okay, that's all for this week. If you have a request, send it through and I'll try to look at it next Thursday.